So my first step of leaving Goldman was realizing I didn't want to be at Goldman. Is that it's not me. I loved Goldman Sachs for many things. Probably the world's greatest network, to be truthful.
Mm.
And you're around some of the smartest people in the world, but you're confined. You're confined in how you are, what you do, in a way that I just knew that wasn't me. I've always been quite individual. I like to do things differently. And so I saw the recession coming in 2000 and I wanted to trade it. I've been lucky. It's been like being taught acting by Robert De Niro and Al Pacino and whatever, because I got to speak to the world's most famous hedge fund managers all day. Paul Tudor Jones and Lewis Bacon and Stan Druckenmiller and you name it. So I thought, I want to give this a go. And so I went to, luckily, one of my biggest client, in fact, hired me, which was GLG Partners, which was a giant hedge fund firm in London at the time that ended up turning into Man Group. And I started a macro book there. And after about 3 months of doing well, 6 months doing well, they said, well, listen, why don't we start a macro fund? So I co-ran it with another guy called Ben Gill. And we started that fund and built that one up. But over that period of time, it was much more entrepreneurial. GLG was a great place. I was losing my mojo with macro. I didn't have a great year in my last year there. It wasn't disastrous. It wasn't great. But it's how the industry had changed. It had gone from being this gunslingers, high volatility, long-term conviction world to asset gathering, low volatility, lower returns. And that was the rise of the pension funds and the insurance companies piling huge amounts of money in the space. And they said, we don't want 15%, 20% volatility. And we're prepared to not have 30% plus returns in great years or more. What we actually want is to look more like a bond plus. We want 6% volatility and we want 8% returns. And I'm like, it's not my game. It's just, I don't enjoy that. And I could see that was the death of the industry because it was forcing people to be shorter term in their time horizons. So macro, Paul Tudor Jones told me a great thing was what makes a great investor in his mind is somebody whose idea horizon matches his trade time horizon. Right? A lot of people think, oh, the dollar's going up over the next 6 months or 2 years, and they trade in and out of it. Or the opposite is true, is they're short-term traders by nature because they have to be. You have this monthly P&L, and every position basically gets reset every month because your investors go, well, why did you screw up last month? They don't look at where you bought something and where you sold it in the industry. Unlike VC, in the hedge fund industry, it's where you were marked last month.
Yeah, it's mark to market.
So it's crazy. So what it means that everybody's time horizon is this 2 week to 2 month time horizon, yet your idea horizon, because it's macro, is in economic terms, which is 18 months or so. To go from peak economic cycle to trough recession, that's a 2.5 year thing. And it gets interesting to trading from macro for about an 18-month period, but you can't do it. So I'm like, this is useless. So I kind of defiantly left and decided to opt out of the rat race and move to Spain because quality of life was something that always mattered to me a lot. Because
You were in London? You
I
were
was
in
in
London
London.
before? Okay.
Yeah. And I thought, what's the whole game for if it's not for quality of life? I mean, money's just an output, but the real thing that you're actually working your balls off for is quality of life. So so I moved to Spain and I realized that I'd had a lot of experience in macro versus most. And I had also learned how to write. I was writing at Goldman. We had this group chat that was very early group chat days, like an AOL group chat thing that I used to run for the whole firm and became very well known for it. So from the chairman down, everybody read my stuff. And then I wrote an article after a business trip to China when I was at the hedge fund called There's Something Wrong in Paradise, when I turned up to China to expect to see all this, all the amazing stories I was reading and getting from analysts, and turned up and there was just empty buildings after empty buildings. And I'm like,
you and Carson Block.
oh my God, this is a disaster. So I wrote it all up, and I think Stan Druckenmiller got 7 copies. And so I realized that if something like that could go viral, and I knew how these guys spoke, and I knew how they thought, I should write research so I can stay in the markets myself and invest, but also have my hand. And so just by word of mouth, Global Macro Investor grew from Goldman Sachs and GLG backing me, saying, "Yeah, we'll
Huh.
definitely sign up," to the world's most famous hedge fund managers, family offices, sovereign wealth funds, and everybody else. So that was the first stab at being entrepreneurial.
Do
And
you think, just to pause you there for a second, I mean, do you think that insight that you had a unique ability to sort of abstract all of the complexity around these things that were happening, um, was that sort of practice? Like, was that, Bruce Lee, like, 10,000 practice
no,
kicks on a single kick, or was it something you just had, you feel like, innately?
I'm a very visual person, so I distill everything into imagery.
Mm,
So, which is why macro so appealed to me, because macro is this massive 3D, always changing map of the world, of all the asset classes, how they're interrelated, the economies, and the news flow. And I found I can hold it in my head, and I can kind of spin it around and look at it and take different component parts aside, and therefore you can simplify it if you can make a picture of it. And so I just create that mental picture for others,
hmm,
because most others struggle to see the connections, to see how this could be. People can think one step ahead, but people don't think two and three. And two and three is where I'm pretty good at, which is longer term, knock on effects, how this is going to play out. That doesn't mean I get all of them right, but I've been consistently pretty good at that over time. And I can explain it to people in a way that they understand it and can grasp it, whether they disagree or agree. I mean, again, that's the beautiful thing about Global Macro Investor. I've had people who barely ever agree with me, and they've been subscribers for 18 years.
hmm.
Probably give you an exact number: zero. Um, I lie. There's probably Chris Pinodi. There's like two or three.
Hmm,
Basically, that's why they turn into family offices,
hmm,
because you can't play that game. The best investor I ever saw, bar none, was Nick Roditi, who used to work for George Soros. And he was you won't find much on the internet. I can see
Yeah, I
you
know. I was gonna
Googling him.
say.
He is super secretive. And
Huh.
he came across my time horizon when in 1991 he was the highest paid man in England. And everyone was like, who the hell is this guy? And he lives above a shop in Hampstead High Street, which is a suburb of London, and became legendary. And I got to meet him, but he was legendary at Goldman and other investment banks for how he traded. I mean, he was a polymath, so he knew in depth about more things than you and I even know exist, and incredible. And Nick was an older gentleman from Zimbabwe or Rhodesia at the time. He didn't have a Bloomberg screen. He used to read the FT. There would be a grandfather clock ticking, tick, 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 when you go to his office. He would throw out analysts who turned up who weren't prepared, who didn't know their stuff in depth. But when he took obscene risk, obscene long-term positions. If you read anything by Stan Druckenmiller and George Soros, they're like, no, no, Nick's the guy, because Nick could see the world in ways that others couldn't see, and have the conviction to have enormous leverage. So Nick was the guy who would have the 300% up year, but Nick would be the guy who would have the 40% down year.
Hmm.
Um, but he was astonishing. I never forget him calling up the futures guys at Goldman